the money flow indicator could be described as a momentum oscillator. It has similarities with the RSI indicator, but also takes into account volume. Usually it's set to a default length of 14, an upper limit of 80 and a lower limit of 20, represented by this blue region. Going over this range with values of 80 or higher is an indication a chart can be overbought and an uptrend can begin to slow down or even reverse. Going below this range with values of 20 or lower can be an indication a chart is oversold. Here's an example where values briefly peak over 80, right around the same time a strong uptrend begins to weaken, leading to range-bound movement and eventually a sharp downward reversal. Then here's a case of a stable drop in price with money flow values eventually going below 20. After that, the downtrend significantly weakens, with similar range-bound movement, though it still drops a bit more, while the money flow indicator eventually recovers to rebound back towards 80, showing a bullish divergence, where price goes down but the indicator goes up, to signal better conditions for a possible bullish reversal, which does eventually develop. So when there's a really strong long-term trend, price can move out of the 80 to 20 range, and the trend could weaken but not necessarily reverse. Like here, the uptrend has weakened significantly after money flow goes over 80, but if you look at the formation of the neutral to bearish candles during this time, they don't have strong downward confirmation in terms of price action or exceedingly high volume compared to the highly bullish candles with high volume before and after this phase. Generally, money flow is considered a leading indicator because, like this chart demonstrates, values can go over 80 before the main bearish reversal begins. Or like in this case, money flow briefly dips below 20 and there's a minor bullish divergence that's not exactly taking place at the exact time the double bottom reversal range forms. Then as the uptrend progresses much further, money flow does eventually peak over 80 for a brief period. Price movement generally flattens but soon resumes higher, while money flow begins to decline, to demonstrate a case of bearish divergence that eventually leads to a sharp downward reversal. Like other indicators, try to combine the money flow indicator with other technical analysis concepts for confluence, such as basic resistance and support ranges and reversal candles that are part of larger structures such as reversal chart patterns, or even Fibonacci techniques such as the Fibonacci extension, Fibonacci fan, and Fibonacci spiral. To learn more about these, along with other indicators and chart patterns, please check out the hundreds of video tutorials I've already uploaded.